What's up, guys? So today's stock market looked calm only if you're watching the S&P 500, but underneath the surface, there was a major rotation happening. So we saw technology stocks, semiconductors, memory stocks, hardware stocks all start selling off, while people rotated into more defensive names. So this is what we got going on today. Dow hit another record high. The S&P 500 finished flat, and AI semiconductor stocks got hit pretty hard. So it's not really a simple green day or a red day, but it was more of a rotation day. Money did not fully leave the market. It moved. AP reported that Dow rose 1.1% to a record close, and S&P 500 was virtually unchanged. And the Nasdaq fell 0.8% as AI and semiconductor stock weighed on the market. So the most important part of today's market is that the indexes were telling different stories. Dow looked strong, S&P looked flat, Nasdaq looked weak, small caps were not impressed either. This is not a broad panic sell-off. It's more like investors were selling crowded AI chip names while rotating into more stable blue chip and defensive areas. And that matters because if you only look at the SPY, you might think nothing happened, but under the surface, things are changing. AP also noticed that more than 2/3 of the S&P 500 stocks rose, even though the headline indexes barely moved, which supports the idea that weakness was concentrated in certain large tech and AI names. So now let's just take a look at the SPY. So looking at the SPY here on the daily time frame, we have many things happening here. So bullish trend, but short-term tired. We have a lot of this chop going on here. We are in a midterm year in July, and midterms are more volatile. We're still in a bullish trend. So looking at the SPY chart, it had massive moves off of the April lows, and the price is still holding above major moving averages. So I would not call this chart bearish yet, maybe short-term bearish on this descending trend line that we got going on here. First resistance zone I'm watching is around 750 to 753 right here. After that, a bigger breakout zone would be about 758 to 760, which would be the all-time highs, the break of the all-time highs. But the problem is that price is starting to chop under this resistance. So the first resistance zone I'm watching is 750 to 753 right here. And if the bulls can get out of this zone, I'm watching for maybe something like this, come back and test it, test the all-time high again, and then potentially break up with that, where I will be targeting the 770 to 780 area, which I think is very likely if it can reclaim. But if SPY loses 740 with volume, I would then be waiting for 732 to 734 next. And if that breaks, then 724, 725 becomes the next biggest support area for me, which I have marked in down right here. So my opinion is simple. I believe SPY is still bullish overall. Still bullish overall. But I would not blindly chase calls here. I'd rather wait for a clean breakout above resistance or a healthy pullback into support before going in on selling some puts here. If that's what, if you have an account big enough to sell some puts, that's what I would do. So now let's take a look at the account right now. So our account is up 12.42% year to date. Was a little higher, was about 17, but we had this market sell off going on here. SPY and reference is up. We can pull up right here. We are beating the SPY. SPY is about 8.75%. So we're doing well. We're not chasing here, Hail Mary trades. We're not chasing lottery ticket trades. We are building steady and consistent income, aiming for about 2, 3, if we can even get it 4 or 5%, which does happen a month on our trades, and we're perfectly fine doing that. I believe this steady increase is better even just for your sanity, holding some of these trades. So that's what we do here. So what are the major catalysts that we're looking at here? We can look at the Fed Watch tool right here, that we have the projection for interest rate hikes actually has gone down slightly. We added 57,000 jobs, 4.2% unemployment. So this was the biggest macro catalyst today. Normally, weak job growth sounds bad, but the market can react in weird ways because weaker jobs means the Federal Reserve has less pressure to rise rates. So in the short term, weak economic data can actually help certain parts of the market because traders start thinking that the Fed may be less hawkish. But longer term, if job weakness keeps getting worse, then it becomes a problem for earnings, consumers, and the economy. You know, BLS reported June non-farm payroll employment rose by 57,000 and unemployment 4.2, just like what was said earlier right here. And now going over to Burry. So Burry, the big short investor, says Micron's valuation, technical setup, and cyclical history point to significant downside after its AI-driven rally. So we have Michael Burry shorting Micron. He just recently got out of his short for Palantir, which caused a decrease, whether you related to this or not, of Palantir from the 180 levels down almost to 100, about 105 before Palantir started bouncing here. And now we see Palantir getting some steam, ending the day pretty well. But he's citing that it's reached historically extreme levels. And I agree that Micron in the past has been a cyclical stock. But do you still believe that to be the case now, with this AI and memory shortage and tech rally we got going on here? It's hard to say, but this, is a bearish position that affects the sentiment of the market, and sentiment in the market is a lot, because when you lose sentiment, it can prove quite difficult to gain that sentiment back. So what is the next catalyst that we're looking at? So the next catalyst we're seeing here is going to be the CPI, the Consumer Price Index, and that is going to be coming July 14th of 2026. So depending on what this, prints, if CPI comes in hot, that could hurt QQQ, small caps, housing, fintech, and multiple growth stocks. But if CPI comes in cool, that can help the market because it would reduce pressure on the Fed. So CPI is probably one of the next big decision points for this market. So we are still taking a look on that. Banks too. Banks have earnings coming up. So we're taking a look at the bank earnings. They matter because banks tell us what's happening in the real economy. We know that there is a credit problem that's getting pretty bad. So I'm watching credit quality, loan demands, deposits, consumer stress, and whether defaults are starting to rise. If bank reports come strong numbers, that supports the idea that the economy is still holding up. But if banks start talking about weaker borrowers or rising losses, that could be an early warning sign. JP Morgan says that it will review second quarter 2026 results on July 14th, my apologies, at 8:30 a.m. Eastern time. So basically here, the Fed is still the macro gatekeeper. If the Fed sounds dovish, risk assets can move higher. If the Fed sounds hawkish, tech and growth stocks, small caps, high valuation names can get hit again. That's why jobs data and CPI matter so much, because they'll shape what the Fed does next. The next FOMC meeting is scheduled for July 28th to the 29th, according to the meeting schedule. So I guess key takeaway here, let's go back to the SPY. So my final takeaway is this: the market is not dead, but rotation is happening. SPY is still bullish overall. Short term, it looks tired and stuck under resistance, which we clearly see. Dow is showing strength, but the NASDAQ and semiconductors are showing weakness. AI stocks may still have a strong long-term story, which I believe they do. But short term, the trade looks crowded. Expect a lot more of this chop right now. And now with Burry shorting semiconductor trades, that adds another bearish sentiment warning for names like Micron, Nvidia, AMD, and other chip stocks. So for me, the key levels are simple. On SPY, I'm watching 750 to 753 and 740 as a support level for bulls that they need to defend. If SPY reclaims resistance, bulls may get another push higher and potentially to new all-time highs before pulling back again. But if SPY loses 740, it could be it could be bad. If SPY loses 740, I'm watching for a pullback back down towards 732, 724. Should be about 732, 724, right around this range, right here. Again, this is not financial advice. I'm just breaking down what's happened in the market, what I'm watching next, and where the money may be rotating. So I appreciate you guys coming in, taking a look at this stock market analysis. And I hope you guys have a great day, great night, in the name of Jesus.